The work necessary to turn interest into offers. So in the last video we talked about the work necessary to find the right acquirer, and when you have the right acquirer, how do you get an interest or a light bulb going on to an offer, to a closed transaction? I'm Arthur Petropoulos, managing partner here at Hillview Partners. We work with companies generating $1 million to $10 million in pre-tax earnings to sell, exit their companies, as well as secure capital. We've done over $1 billion of transaction value, over 150 transactions in aggregate over this past decade. And in these videos, we like to dig into different items that come up as we're having conversations every day with current clients, prospective acquirers, capital providers, and all of the frequently asked questions and thoughts that arise in those dialogues. And so today's thoughts is, okay, you're out there in the market, you're talking to people, there is a preliminary level of interest. How do you pull that interest through from actually an interested party to a bona fide offer? And how do you evaluate it along the way to make sure that those offers are real and that those offers are likely to get from that offer stage to an ultimate closing? And so 9 items and a 10th tip towards how do you make sure you push that interest through offers and you separate the wheat from the chaff along the way. The first of these is discuss the interest. If you talk to somebody and you present the opportunity to them and they say, maybe it's interesting, you say, why is it interesting? What would be your interest? If they say, well, it's interesting because I can buy a quarter for 20 cents, that's usually a quick exit of the company because we're not looking for those types of buyers. That's not to say that there aren't value investors out there, but when we're representing companies, we're looking for the optimal outcome, and the people that are purely buying on dollars and cents typically are not going to be that party. Give us a good reason as to why there's interest, because interest tends to go with vision, and where there is vision, there is an upside to the situation in someone's mind. And this yields number 2, is experience. And so typically the first point of interest will yield a discussion around experience. Well, I find this interesting because this particular business is consolidating, and from my experience in buying businesses that did this other thing, this is a similar space. We saw the aggregation and consolidation of pharmaceutical services companies, and now we're starting to see the same thing in certain food products or certain agricultural components, whatever it may be. But is there an experience that's correlated? It doesn't have to be entirely on the nose and direct, but something that someone can draw from. Because third, it will lead into capability. And so capability takes 2 shapes. The first of these being, is there a competence that would be necessary to acquire and run a business? But secondly, is there a capability from a financial perspective and a funding perspective? And typically someone's ability to secure capital for an acquisition is going to be predicated on their experience and interest. And so these first 3 things tend to kind of move in tandem. And number 4, which can oftentimes be a conclusion of numbers 1 through 3, is what is the thesis? If someone says, I have an interest in this company because I think the field is consolidating and it's very fragmented, I have experience buying similar, even if not the exact same types of companies in the past, I have investors lined up to support the acquisition of this, as well as my own self going to come in and help operate this company, and we have the thesis of iterating this exercise to acquire 20 companies doing the same thing over the next 7 years, that's a good start to the conversation. And so moving forward, number 5 is what we say the right questions. And so during the exercise of providing people with information, assuming that they passed through the first part of the filters, we're going to be seeking follow-up questions. And you can tell by the level of interest in the questions, by the level of specificity, A, are they paying attention? B, are they keenly interested? And C, what is the momentum that they're building? If someone is saying, we're doing more research, we're looking more into this, we're finding all of these interesting things, and based on your materials, here's our thoughtful questions, that's good. Now, you don't want a laundry list of 500 questions because it indicates you really didn't look at any of the detail, but if they're thoughtful questions, the right questions, that's a good indicator that you're pushing from that interest to an actual offer. Number 6 is responsiveness. Everyone in the world is busy, and so the idea that people vanish for a few weeks and then come back on a deal really doesn't yield good results. I think the saying goes that if someone shows you who they are, believe it. If someone shows you their level of interest in something, tend to believe that as well. And so the responsiveness, whether it's just, did you get the last information? Do you have any thoughts? Can we have a catch-up conversation regarding this? Purely the time that you send that message until you hear back from that message, you leave that voicemail until you hear back a phone call, is an indicator as well. Now next, as you're moving towards the offers, questions and prodding about structure and value are important. So if you said to somebody, how are you going to build your house? And they said, well, I think it's going to be 3 floors and it's going to be pretty and it's going to be painted white with a nice yard and a Great Pyrenees outside. Well, that's a wonderful thought, but it's not a plan. And so if you talk to someone in the process of buying a business and you said, what's your value and structure that you're thinking of? If they say, well, we think we're going to offer something that'll be compelling, and we think the structure will be most of the cash at closing. Well, that's nice too, but it hasn't been funneled down to something actionable. If someone says, well, we're thinking 7x EBITDA because of these reasons, we think structure will be 95% cash at close with a 5% seller note over a duration of 2 years at X% interest, right? The more detail someone gives, the more you can push them for what do you think the structure would be? What do you think the value would be? The more detail they give, the more you know that there's a real offer forthcoming, and when that offer comes, there's a higher probability it gets to a close as well. Number 8 here is interviews. And so typically it'll happen right before the letters of intent or right after indications of interest, depending on which way a process is going. But we set up interviews with the most interested parties, the ones that we think are the best, with either the owners or management of a company that we're representing. And you can tell the way someone shows up to the meeting, the questions that they ask, how locked in they are, how much they want to learn, how much homework they've already done. All of these things are strongly indicative of whether there's going to be an offer if there hasn't been one at that point, and how serious they are about it. If someone shows up and just says, tell me your story, and then spends the rest of the conversation talking about themselves, it's not going to yield the same as if you say, well, how does this segment of the business work? Why are these margins this way? How does this product work? How does sales work? If someone really digs into and starts seeing themselves or communicating it as if they were running the business, that's going to be a far better indicator. And number 9 is we'll generally say confidence in the diligence process. And so similar to how someone would describe an offer and structure that they may be putting forward, you'd also say, how would diligence work? Let's assume we agree on a deal. How does it work from that point to the closing? If somebody starts saying, well, I guess we'd find a lawyer, and I think I have this accountant that would parse through the numbers, and based on that, we'd probably be all right, and we'd start having some chats with banks, that's not greatly confidence instilling. However, if somebody says, well, we've got our quality of earnings team lined up, we've got an attorney that's ready to look through all the contracts, we already have conversations and term sheets with some of the banks, or down the road with banks right before term sheets if there's going to be a financing component of it. We already have our investors lined up. It's going to take 90 days, and here's how we see those 90 days evolving, right? That instills confidence. That says to me, okay, good. Now you still want to vet all of those things out and say, okay, well, what's the financing look like? What's the capital look like? That's part of the conversation leading up to offers. However, again, the detail, it's all in the detail. If you ask someone how to build a bridge, you can very quickly know if they have built a bridge, if they're going to build a bridge, and if they're capable to do it, even if they wanted to do it. So not that different with this business. And so, as we summarize here, the work necessary to bring interest to offers, I want to reiterate these 9 elements that will instill confidence and that allows you to sift those that are not serious to those that are serious, and for those that are serious to really push them forward. There's 1, interest, 2, experience, 3, capabilities, 4, their thesis, 5, follow-up or the right questions, 6, responsiveness, 7, discussions relative to structure and value, 8, their interviews and how they behave during those, and 9, what is the confidence in the diligence process. And so now you've done that. As we've discussed in the last video, there's iterations that are necessary to do this over and over and over again. And so what is the secret, or what is the tip? Number 10 here, it's grind all doubt out of the business. You think of one of those stone ground mills of turning wheat into flour. It's not that different in this exercise. As conversations happen, all of these chunks of doubt just get ground into a fine flour. And if there's problems, then it is removed. The party is no longer going to be in dialogue relative to the acquisition. But it's our job to iterate and iterate and iterate to every point where there is some doubt, every point where there is some lack of clarity, to reiterate those specific elements until the whole uncertainty of the exercise has been ground down and eliminated, such that when you ultimately get to the offers, when you ultimately negotiate the optimal offer, and you ultimately enter that diligence process, it's not going to have any risk of not closing. And so that's the thought for today. You start with interest, you move towards offers, you move to a closed transaction. How do you optimize the probability of getting from point A to point B, from point B to point C? Focus on these 10 things and iterate like anything else. Diplomatically, yet persistently and meticulously, push these things through until you get the conclusion that you're looking for. So that's the thought. Hope the week continues to go well for everyone. Keep pushing forward. God bless. We'll see you for next time.